Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 26th of April, and starting off with the FTSE 100, which managed to peak out through 7,900, I suppose roughly where the resistance was at the beginning of last month. We've got support notionally at that broken February resistance line around 78.15. Below that, the chance of heading down to 77.70 at the rising 50-day moving average, but at the moment, not looking for anything lower than that, especially while the RSI remains above neutral 50, which it is at 59. To get a new leg to the upside, an end-of-day close above 79.30 is required. That would take us to 80.47, the old February record intraday peak, and then there's 82.50 at the top of that rising trend channel from September, which would be the best case scenario by the end of next month if we manage to break out of this recent range in a positive way. Moving on to the DAX, where this was holding above the 15,700 area, which was the old February-March resistance. It still continues to do that, which is rather impressive. I think the low today around 15,694. So the market can see that old resistance and has made that new support. Top of the channel there at 16,500, and we'll be looking for that if we can get an end-of-day close through 15,900. On the downside, if we do break back below 15,700 on an end-of-day close basis, for instance, then the 50-day line there around 15,450 would be the target. But as I said, I'm saying with the FTSE as well, not expecting much more downside than the 50-day line. The culprit in terms of dragging the other markets down has been the Dow with the reporting season, etc., etc. Here we had another failure at that one-year resistance line, 34,100. Recent support, which was initial April resistance, 33,600, has given way, and we're looking really to the 50-day line around 33,100 as potential support here, but ideally not more than that on the downside. RSI at 52, so just holding above that neutral 50 level. If it starts breaking below that today, then we would be looking at the 50-day line over the near term. On to Bitcoin, which in a way topped out before the indices did, but now is actually bouncing off the 50-day moving average, which is one of the scenarios that we were hoping for. You can see if you look close up, just touched that 50-day line earlier in the week and bounced quite nicely. Market up nearly 1.75% today. We've got the June resistance line projection there now up to 33,500, and that's our target, hopefully by the end of next month. Below the 50-day line at 27,000, then risks down to 25,000. But hopefully after today's performance, or the performance of the last 24 hours, we're not going to be taken down that low. RSI pushed back above neutral 50, 53 at the moment. So that's pretty impressive just to have that sort of minor bear trap situation below the neutral 50 level, but bouncing off that rising 50-day line. Normally a decent continuation signal. On to the stocks of the day, and starting off with African Pioneer, where I was moaning that the shares were near the bottom of the range. Now they're actually near towards the top of the range, or at least at 3/4 of the way up. Looking for 3.9 pence initially, while we're above yesterday's resistance around 2.9, and then after that as high as 4.5 pence, maybe by the end of next month, if this move is the final big move to the upside. The reason for being confident about a potential move to the upside is we have an unfilled gap to the upside off the lows, but we've had two of them, so that does look rather encouraging. And I think if you look closely, even the 50-day moving average is rising, along with the 200-day line suggesting we're in the run-up to a golden cross, and that tends to be a very strong part of the cycle. Onto a stock where I'm looking for a bounce off the recent support. So Caerus Minerals here bouncing off the floor of that rising trend channel from back in July last year. We had a gap higher there. We filled that gap and we've risen. So looking for 8 pence, maybe as soon as the end of next month. If you're cautious, which I think a lot of people might be, then you wait for an end-of-day close through the 50 and 200-day moving averages at 4.6 pence before targeting 8 pence by the end of next month. Cyanconnode is the next on the list, and here breaking through the 50-day moving average. We've got a rising trend channel here since October 2021, and we're looking for progress within that, perhaps up to as high as 35 pence over the next 2 to 3 months. Key here, I suppose, is breaking back above 20 pence. If we can do that over the next week or two, then one would be rather more confident that we could get to 35, maybe by the end of June. Image Scan is the next stock, and with Image Scan we've got the rather nice position of having broken above the 50-day moving average last month and rising above a rising 50-day line. That suggests that the top of the broadening triangle there from February last year at 3.75 pence could be on cue for the end of next month. And I just really like the curves of both the 50 and 200-day moving averages there. And after that coming after the trend line break from April last year around 1.75. So at least while we're above 1.75, looking for 3.75 there. Hellenic Dynamics is next, and after a slightly soggy start in terms of its life on the market, looks like things are basing relatively well. Higher low put in this week and rising above the looks like a rising 50-day moving average, looking up to 1.16 as an initial target, maybe over the next 4 weeks or so. Best case scenario would be maybe up to 0.2 by the end of next month, but if you're cautious, you'd probably wait for the 0.12 level to break before assuming that we've got the higher low and then the higher high taking this stock higher. Next situation is Harland and Wolff, where I've seen somebody on Twitter actually going short of the shares at 17 pence. So let's see if they can have a happy story there in terms of that particular trade. Obviously, we want everyone to win. We've broken the initial April resistance there around 16.65 pence. So above that, as I am a bull, looking for initially up to April resistance around 18.5, and then maybe over the next 1 to 2 months, maybe by the end of May, going into June, as high as 27 pence. But the key here really is getting through that 18.6 pence area. Below that, there's obviously the chance of further consolidation for the shares. But I looked at this stock the other day, and the reason for the bullish stance as opposed to a bearish one is that the way that the 50 and 200-day moving averages are both rising, and we've had an RSI bounce off the neutral 50 level. So always interesting to see how such a situation pans out. Takes two to make a market, and good luck to all holders or all shorters as well. Moving on to Kendrick Resources, and here another stock which looks like it's getting its act together after that final bear trap below 0.92, the initial February support there. Above that, we were looking for obviously the 200-day line, which we've nearly hit around 1.25 pence, and ultimately maybe by the end of next month up to 1.7 pence at the top of that broadening triangle from back in October. But a bear trap rebound there within a broadening triangle, and at least while we're above the 1 pence area, the 50-day moving average, we feel that that could keep going. Metals exploration is next, and here edging up to the initial target here around 2.6 pence. Hopefully we'll see that over the next couple of weeks. Big picture target as high as 3.5 pence over the next 1 to 2 months, while we remain above the 50-day line at 1.75 pence. A requested stock next, and it's good that it's requested because it's not probably one of the situations I would be looking at. Normally look at momentum situations, but here with Parkmead we've had bullish divergence going into the latest break of that falling wedge, so that the entry point notionally 23 pence, and we're obviously already doing well today. Best case scenario here is up to 45 pence, maybe by the end of next month, and it'd be disappointing if we didn't get up to at least 34 pence, which was the March support on the way down. So above 23, looking for 34, and hopefully a bit more on Parkmead with that bullish divergence backing the turnaround. Thor Energy looking better as well at the moment, just breaking that resistance line there, 1 year resistance line in the 50-day moving average, around 1/4 pence. That gives us our initial target at 0.4 pence, and the 200-day moving average 2 to 3 month target as high as 0.8, but obviously that could take some time, and we are not quite out of the woods yet, even though we've broken that trend line. Only back below 1/4 pence, really delaying the recovery idea there. Trifast is a situation which has bounced off its rising trend channel there. We've got a 1-day island reversal, which is, I think it's called an abandoned baby in candlestick pattern terminology. Here the view is that while we're above 62 pence and for all that channel, we could head up to as high as £1 over the next 2 to 3 months. If you're cautious, you probably want to wait for an end-of-day close above the 200-day moving average at 75 pence, even though we've had that island reversal, which does look very attractive indeed. Tertiary Minerals has its fans, hordes of fans, I think, probably at the moment. Here we're finally doing what we should have done maybe a month or so ago, i.e. Heading back towards the top of the range, which is around the 0.3 pence area. We've got the 50 and 200-day moving averages now rising. That suggests that we're going into a golden cross, and the run-up to a golden cross, as I always say, is normally the strongest part of the cycle. So looking for 0.32 as soon as the end of next month, while we're above the 200-day line at 0.16. Last stock of the day is one that doesn't get much coverage here, but keep on announcing these contracts, so I thought I'd give the company a break. Here we've got Totally, and all support there around 22 pence. Be nice to see a break back above 22 pence to give us a target of 32 pence over the next 4 to 6 weeks. Stop loss here back below the 50-day line around 19 pence, but I think it's quite unlikely now that we'll go back below there, given the good news that the company keeps on delivering. That's it from me today. More updates tomorrow.